Good
Hello.
morning.
Good morning. All right. So, everyone, we have an additional guest today. We finally got Nick on the live stream. Nick is the third co founder of Stock Unlock. He is the guy that is like the coding technology genius. So, for a lot of the features that we're building and for a lot of the features that you see, it's a lot of Nick. The insight screener that's coming out actually, like Nick is basically building all of the tech for that. And like
Thank you.
how's that going, Nick?
Oh, it's going great, man. I can't wait to release that to users. I think that's going to be a big hit, and I don't know, it's actually like a really fun thing to build too on a tech side. So having a blast with that project for sure right now.
Yeah, I mean, this week, so a lot of, I mean, well, no one really can see the insight screener actually. So this week, Nick built some, what are those? The filters. We have like the industry filter, the market cap filter, and there's a third one.
Exchange.
So yeah, we're starting to add in filters to the screener. It's coming along great. It's looking great. So hopefully we can start to get that in our beta testers' hands next week. But yeah, Jake is also out of the office, as everyone can see.
Yeah, I see a few of our see a few beta testers in the chat too. And if anyone's not a beta tester yet and wants earlier access to the screener, you know who to contact. Hit us up on our Discord or support at Stock Unlock. But yes, in California, it is 8:35 here, and it's a reality check for me that usually we're on the East Coast, and definitely understand if people on the West Coast can't wake up for the stream time. No hard feelings there. I woke up 4 minutes ago, had a message from Daniel, and I've been sprinting around, and it seems like we made it. So great to be here.
Get yourself together.
Nick, it's so awesome for you to be on the stream. Very happy to have you here. Hopefully you come to more in the future.
Yeah, seriously. Also, just like while people are still joining the live stream, Canada, where I'm at, Calgary, got our first snowfall last night. It is still snowing, and I think we got like 3 feet. No, sorry, not 3 feet. Probably like 2 feet of snow overnight. Not even kidding. It's insane.
Oh my god.
Yeah. So winter is here.
I don't know what you're talking about.
I'm a little bit jealous of you, but moving on to what happened in the market last week. So the major news, the first major piece of news, heading into the weekend. I mean, I don't know if you guys saw, but the S&P was almost up like 3% on Friday. Like everything was just kind of rallying like crazy. So I dug into why that was. And the reason that stocks were up basically is because the rate of interest rate increases, if that makes sense, from the Fed, people are speculating that it's going to slow down. There was like this Wall Street Journal article that came out, and they were like, we think the Fed is going to start increasing interest rates by 0.25% or 0.5% in the future. Right now, they're doing 75 basis points. So people are basically just speculating that the Fed is going to slow down interest rate increases. So the market was like super happy about that, and everyone was buying stocks on Friday because of it. Then I went on Twitter and I started like actually digging into if this was true or not. And there's a lot of evidence that like the Fed is not going to slow down interest rate hikes. And their language over the past like 2 weeks has been no. Inflation is still a problem. Our goals are not being met. Like we need to tackle inflation still. So I don't really know where like this thinking came from, and I don't know if it's true, but it kind of seems like this massive rally on Friday is, kind of fueled by nothing but an article.
Seems like a lot of speculation so far. The Fed hasn't said anything, hinted at it, or I mean, the only thing they haven't done is said, no, we're not doing this. So until there's something more conclusive, I think, it's an interesting move for sure.
Yeah, I think the Fed said they're not going to talk about this until like November 2nd now. So I think we have like, 10 more days of speculation around this before we get an actual, finalized whatever statement.
Yeah. I say two things that pop out for me. If you zoom out on the 1 year, that little 3% bump is still really relatively nothing. And from all the research, I've done, and not that I have a lot of citations here, I agree with you, Daniel. I haven't seen any reason to believe the Fed will stop their interest rates rise. Also, the market has been so volatile. I mean, we could easily be down 1.5%, 2% on Monday. It's just been really crazy. The last part here is when indexes move like that, it's usually not retail investors like us trading. It's usually the hedge funds, the big market maker movers. So I know it's hard to get that data, but I would imagine that a lot of the computer algorithms were starting to go crazy once those tweets went out to buy back stock. So
When some people start trading, everyone tries to start trading, and yeah.
Yeah, you got to get your performance numbers up.
One thing I learned literally yesterday from the Stock Unlock newsletter is that banks are benefiting from the interest rates going up, and they get more income from that. Like that was something I didn't know and thought was very interesting to hear.
Yeah, what's interesting about that is that revenue is 100% profit as well.
Yeah.
Because it's literally just the interest rate going up so that they can lend out, money at higher interest rates, which is a 100% profit margin for them. So, like, I dug into JP Morgan and Bank of America's earnings like pretty deep to figure out, is the economy okay and everything. And these banks are literally producing a record amount of revenue right now, like the most that they have ever produced in their lifetimes. And yeah, I just think it's super interesting because that's going on at the same time as bank stocks are all down like 30%.
Is this what you're talking about here, Daniel?
Go to the interest income on the revenue.
Yes, this looks familiar from the newsletter. That is a very high. That is a very high bar right there.
Yeah.
Wow.
So in the TTM, it's like not quite catching up yet because there was kind of that dip. But in the most recent quarter, like their interest income was, a record high.
Wow, 15% quarter over quarter. That is, or actually 16% if you round up.
Yeah. And Bank of America, I believe, said that if interest rates rise another 1%, like every 1% interest rates rise, they make another $4.2 billion in annualized interest income. So if interest rates keep going up, like they're just going to continue making more money.
And stupid question, what happens if they go down? Will this go right back down to reality, or do banks have a way of somehow sustaining this? Because I'm sure that their, earnings multiples, as well as like, not really that we like to use price to sales, but all those numbers will start to go up. People buy it, but if they go back down, is the stock just going to do a reversal?
I mean, I don't know what the stock is going to do, but if interest rates go down, then yeah, the interest income should also go down.
Yeah, it's been a good month, I guess, for banks.
Hasn't been a good year though, I don't think.
Yeah.
Look at year to date.
Oof.
It's all about the time. It's all about perspective, right? It's all about perspective in the market, and it's actually not even beating the SPY right there, S&P. So
no.
One thing you see though is I bet the dividend yield has gone up from that, but I don't know if 3.27% is that better than a government bond right now. I haven't checked the latest.
No, it's not.
Yeah, well, at least the dividend yield goes up when the price goes down. But yeah, crazy. Let me know if there's any other bank stock you want me to pull up here, Daniel. If you want to move on to something else.
Oh no, that's okay. But yeah, that's basically like the news that I've seen in the market over the past week and like why stocks were rallying into the weekend. I'm seeing a lot of comments here. So I'm going to take a look at some of these comments now. Sorry, everyone. I'm just scrolling.
Yeah. Good morning, everybody.
Oh, Jake, this one might be good for you. Dan C says, would like to see Tilray. For context, Jake, do you still own Tilray?
Dude, do you know what diamond hands means? Okay, a little bit of backstory here. Disclaimer, I own shares of Tilray. This is not financial advice.
Share your screen if you're going to talk.
Yeah. Yeah, you can share your screen. I had a pretty large position in Aphria, switched over to Tilray once Tilray had a reverse merger with Aphria, and then was selling shares up as it went up, covered my losses there. So that's my disclaimer on this. I am not underwater, even though the stock has been down a lot. Yeah, I don't really have too much, honestly, to update in terms of a live stream for this stock. The thing that I like about it, which is why I hold this, is I do believe Tilray can be a global leader in the cannabis industry. The reason why I believe this is I'm a huge fan of their CEO. They have been going through some tough times financially since the cannabis market has been getting totally wrecked, as well as there was a huge bubble and some of these stocks got memed. So I think a lot of, real investors got scared out. some fun things that people don't know a lot about Tilray that not enough people are talking about. They own a brewery called Sweetwater. I was actually on a flight from New York to San Diego, and Delta has a deal with Sweetwater. They sell their beer on all their flights. This is not just a cannabis company. And while it is a very, very speculative, and I would never recommend for a friend or anyone to buy this today or any stock because I'm not a financial advisor, I just do think that there's a little bit more to the story here than this just being another, meme weed stock. I'm ready to get hate from this from everyone here. And again, very speculative, but I didn't have a reason to sell. I will be clear, I have not been buying more. I have not purchased one single share for at least a year. So this is very something I'm sitting on right now.
Diamond hands.
Yeah, Jake is the king of diamond hands. You'd make Charlie Munger proud. But yeah, so Tilray, I mean, it doesn't show it here, but I believe in 2018, during this like crazy bubble that happened in the cannabis sector, the stock actually topped out at $300 a share, and I think it was up like 1,100% in the matter of like 2 months. Yeah, a couple of months, and that was crazy. I remember being in the stock market at that time and seeing these cannabis stocks like literally, 11, 12x within a month, and it was just wild. And then right here in 2020, there was also another like Wall Street bets speculative craze that went on, and Tilray's stock went from, what was that, $8 to something like, it's so hard to get the peak right there, 64.
It was
Like,
so quick.
look at that spike.
I did sell there, not at the literal peak. I'm not that good, but like around that peak, I think it was like in like the 20s.
Yeah, now it's down 95% from that peak, but I actually haven't taken a look at the stock recently. So let's take a look at its insights. Right away, looks like it has some very bad, average, some very goods though. Interesting. So profitability 1.4, gross margin is 19%, kind of bad. Operating margin, net margin, free cash flow margin, all negative. Free cash flow negative, lost $150 million over the past year. Cash runway, though, it does have 39 months of cash at its current burn rate. So, like, the company's probably not going under anytime soon. It's a lot of cash to have. Current ratio is also 3.3. Shares have increased by 28% over the past year, though. So it looks like they are diluting quite a bit. Now with growth, the revenue's actually gone down by 22% over the past year.
Yeah, they got hit really hard by COVID.
Yeah, okay.
It could be kind of an excuse. So one thing about this business that you don't see here is Simon is running it, and if you look at his background, he has this guy is a very decorated CEO. So one of the both theses here is, he came in a couple of years ago. They also took Afria in and definitely rewriting the ship, but it is very much I'd kind of say a turnaround play in a speculative industry for sure.
Yeah, I would agree.
Nick, do you have any thoughts on Tilray here? I think you may. Do you also still own shares? You don't have to disclose that if you.
I definitely do still own shares. Wish that I had sold at that Wall Street bets craze peak a little bit more than I did. But holding on to them because why not? Still, came out of it pretty happy with everything that turned out there. I'm happy. I'm really surprised to see they have so much cash runway though. Like that's shocking to me considering the revenue's declining and the hardships they've been facing recently. But yeah, good sign clearly. Not a lot of cannabis stocks have that much runway. So
yeah, I would definitely agree. Yeah, I mean they have cash of like $500 million. What I am interested to see is where did that cash come from if they're not. Well, their shares increased by 20% over the past year, so I'm imagining it's dilution. And right here, yeah, looks like about, what is that? Probably near $400 million of dilution over the past year on a $2 billion market cap. Yeah, that's about 20%. So that is where the money's coming from. It looks like they're probably not going to have to dilute again anytime soon, but definitely something to watch out for when you're investing in companies where they don't produce any cash. Because if they're not producing cash, then like the cash balance is going to continue going down to zero slowly, and like businesses got to make money at the end of the day, right? This is actually a stock that we talked about on our channel recently. This is another cannabis stock that's literally down like 99.5%, And the part of the reason that I think cannabis stocks in general as a sector are down so much is because there's companies like this in them, and a lot of the companies are like this, where they're like literally just burning cash. Gross margin is negative 35%, and like cash runway of less than a month.
Yeah.
So these businesses are like really close to going under.
Can you bring up their shares graph from the financials tab to show the dilution? Because I'm coining a new term here. This is cyclical washing machine dilution, which you could visualize a washing machine going round and round, and this company is just continuously diluting shareholders with no regard to anything. They actually don't really have a choice because they're probably not creditworthy and no one's going to give them money otherwise. But this is just really predatory behavior, in my opinion.
Yeah, so they have 433 million shares right now, and in 2015 they had 7.3 million. So their share count has increased by 60x, 60, over the past 7 years. That's a lot of dilution. So yeah, that's kind of the stuff that goes on in the cannabis space. I think there are some good companies in this space personally. I own a couple, but yeah, there's a lot of subpar stocks out there, I'll just say. So you got to be careful for sure.
Yeah, we're getting some more comments in here if we want to hop to another one.
Yep. Okay. Do you guys have any? Every time I come back to the screen, I got to go through the whole list. So is there any that you guys have seen?
I love bringing up random tickers I haven't seen before. I see Kron. Someone said EPM. So we can hop on those, check out the insight scores. If anyone else has stocks that they'd like for us to chat about, it's usually impossible for us to get to all the comments, but we do read them all. So please drop them below.
Okay.
Alex Diaz, if you sign up for our newsletter, we actually had a little insight on Tesla there. So feel free to reach out to us if you want that.
Okay. This is the ticker right here. You said, Jake, EPM?
Yes, and I'll get the comment up on the screen too.
Perfect. Thank you. All right. So from the name Evolution Petroleum Corp, I imagine this is an oil company or involved somehow. It's a smaller cap company, $267 million market cap. Right here, insights so far look good. Looks like revenues and everything is growing, which would make sense because oil companies have seen their fundamentals grow over the past year with the price of oil going up. Located in Houston, Texas, currently employs 8 full-time employees. So yeah, this is a very small company.
That's half the size of Stock Unlock. We have 4.
Let's go.
Well, including us, we have 4. So you're seeing 75% of the company right now.
Yeah. Okay, insights. Looks like a lot of very goods. The insight score is 4.35 right there. So what is going on? Dividends look good. Dividend has grown by 170% over the past year. Gross margin's good. Free cash flow is negative though, hey? Negative 2.4 million. That's very interesting. Looks like they got a lot of cash though. Balance sheet looks pretty strong. 4.3 financial health score. Wow. Okay. Growth is 5.0. Look at that growth.
Revenue operating cash flow increasing by 1,000%.
Yeah, love to see that.
Revenue it might be from a low number though, but
yeah.
Like one increases to Daniel, here's one thing I'd like to look into here. I see that there's an earnings yield of 12%, but you said they're free cash flow negative. So I know earnings is a gameable metric in terms of it could increase from asset value and stuff. We don't know the answer to that right now, but that's my first curiosity as an investor here. Like what makes up their earnings and why is it so different from their free cash flow?
Yeah, so here on our profitability score, Jake, actually, the net margin is 30%, right? So that's, the earnings margin essentially of 30%. But then, yeah, as you said, free cash flow margin, negative 2%. So there's like a huge discrepancy right here. And that's also reflected in the cash conversion ratio being 0%. So basically none of the earnings are actual cash flow, which is why we say that's very bad because there's like a massive discrepancy there.
What is it then?
Well, we're going to have to find out. All right. Cash flow. Operating cash flow in the trailing 12 months is up a lot. So that would mean that their CapEx spend is more than operating cash flow, which it is. So their CapEx spend is growing. I wonder if they're investing in like new oil assets because free cash flow is negative. But like as you can see here, operating cash flow is going up like crazy. So income statement, net interest expense, income before tax, net income earnings, 33 million. So there's a difference right here. I don't know if we have this data. It's probably like a one-off line in their income statement, but their operating income is 45.3 million. And usually when that happens, it's, as you said, Jake, it's probably a gain on an asset, or they sold an asset over the past year. But yeah, I'm going to say it's probably a gain on assets, because on their property, plant, and equipment, like their asset value increased by over 50 million over the past 2 quarters, which will be reported towards net income. So yeah, I would like to get the specific on this. Unfortunately, you would have to go to the 10Q and take a look at their actual SEC filings, but I'm going to imagine it's that. Like you can make a pretty good estimate that it's that, a gain in asset value.
Yeah, and one other thing I'd say, if anyone would be looking to invest into this business, try to understand how competitors behave here. One thing I don't understand, but I would want to if I invested in this, who are their competitors? Do they have any? And like, are they going to have the ability to keep growing in the environment that we're in? That would definitely be something to dive deeper into.
Yeah, I would also look at why their CapEx spend is increasing so much. Like why, like operating cash flow is increasing so much, but why isn't that converting into free cash flow? So again, you would have to go to the SEC filings, and like what I do when I'm looking for a specific metric like that, when I go to the SEC filings, the 10Q or the 10K, is I just control F, and then you can type in and search through the whole entire document. So I would just control F, search like operating cash flow or cash from operating activities, and then you can comb through the entire lake. Because sometimes those documents are 100 pages long, right? No one wants to read that. So,
Nick, do you want to pick a comment here? First one.
Let's take a look at SNA. Don't know them at all. From Craig.
Not Snap.
not
Snap.
That was a pretty talked about stock this week too, but might be over talked about at this point. But SNA, haven't heard of that one yet.
Nick, actually, what are your thoughts on Tesla while I pull this up?
I think it's complicated. I think it's a really awesome company. I mostly invest in like the tech sector as much as I can. It's what I know best. I've never invested in Tesla personally. That's not, financial advice for anyone else, but I don't know. I think, it could go very positively in the future, but I just think like right now is not maybe the best time to get into it if that's something you're looking at. It's a big speculation bubble cycle kind of all the time, it feels like. So hard to say. I think Elon's obviously, a genius, a little bit mad too, in some regards, doesn't treat his employees the best either. But, building some great companies too. So can't put anything past him really.
Yeah, I would agree with that. Like, I think Tesla is an incredible company that's obviously changed the world. But I also think, like Peter Lynch says this, the number one stock that Peter Lynch avoids the most is the most popular stock that's the coolest company, because it's also usually the most popular company. And to me, like every time I read that quote from him, I just think about Tesla.
How can you not?
Yeah, so it's just like you're paying a premium for how cool and popular the company is, and like how popular Elon Musk is, and that's like always why I've avoided it as well. So yeah, that's kind of my thoughts too. There's also a quote in The Intelligent Investor that says the better the company is, the more speculative the stock is likely to be. And I think that also definitely applies to Tesla.
It's always applied to Tesla. I mean,
yeah,
since it went public, right?
All right. We're on SLA. So this is Snap-on. So from my understanding, this company manufactures and markets tools, equipment, diagnostics, repair information, and systems solutions for professional users performing critical tasks. I've actually seen some Snap-on products before. Like if we zoom in right here, you can see in their logo, they have a wrench. So this company makes like tools, okay? They basically make and sell tools. All right, insights. Dividends look like they're growing. Gross margin 52%, operating margin 25%, net margin 19%. Free cash flow margin is lower than net margin, but not that much. 13% right there. Revenue's not really growing, gross profits aren't really growing, operating income's not really growing, and net income grew, but cash flow is down. So yeah, immediately I would want to know why are earnings going up, but cash flow is declining. And also, it doesn't really look like this business is growing too much. So when I see that,
wonder.
sorry, what's that, Nick?
I was going to say, because these are 1 year insights, I wonder if towards the start of the pandemic, people were buying a lot more tools, wrenches, things like that for hobbies or professional stuff like that, and now that we're comparing it to a year drop off, maybe something like that's going on.
Yeah, so you can definitely see that right here during the pandemic, there was a drop in revenue. So that definitely happened. But it does look like this business's revenue over time does grow. I mean, here in 2008 during the recession, it dropped quite a bit actually. It looks like it dropped by like 20%. But ever since then, revenue has been growing.
People weren't building houses during the recession.
Yeah, you're right. I guess so. But yeah, you can see right here, operating cash flow is down like 40%. So what that would mean then is if we go to our freeform tool, what is happening to the operating cash flow margin? Why is my caps lock on? Oops, operating cash flow margin. Yeah, so the operating cash flow margin has dropped from 27% down to 14% because you can clearly see that revenue is going up, but operating cash flow is going down. So yeah, when I'm taking a look at this, if I were looking to invest in this business, I would once again go to the SEC filings and try to figure out like, why is this happening?
One interesting thing I just saw, even though I don't want to give it away, check out the insider trading tab on this company.
The insider trading tab.
Oh yeah, some interesting people who are deciding to sell their shares and not buy them. So,
interesting. So the CEO sold $7 million worth of shares recently. CFO also sold 1.4 million shares. Another $4 million sell right there. So it looks like they are selling millions of dollars worth of shares. Yeah, I mean, I don't know. This is a stock that like I would just have to take a lot more looking into, but right away, revenue looks like it's growing. Operating cash flow is going down. I would want to know why that is. And you know what? While we're here, let's take a look at price.
I also noticed one more positive thing. This one's really a mixed bag for me too. Their tangible book value, which is the only book value I like looking at, that is very, very consistently going up over time, like very predictably. So not that you should only invest on a business based on their balance sheet, but at least it seems like the CFO who's selling their shares is managing funds well, at least from the perspective of making sure, they're not going to go in debt or anything scary like that.
Another thing that is important to note is like, okay, the CFO right here did sell that $1.4 million worth of shares, right? But when you take a look at the percent change in shares, it was 8% of their position. So they're not like, they didn't sell like 50% or like 100% of their shares. It was 8%. And then the CEO right here, $7 million sell, but that was only 5% of their shares. So again, not really like, they're not like selling every share they own. Who knows? Maybe they wanted to buy a new house or something,
Stephen Robinson, it just made me laugh in the chat. Many reasons to sell, one reason to buy.
I agree. Yeah, I think that's another Peter Lynch quote. I think Peter Lynch said something like, "There's a million reasons to sell, but one reason to buy." You think the stock is going up. Also, on a price to operating cash flow basis, like this company is sitting at 15.7. That's not awful. Its average is 14.7 over the its average is 15.2 over the past decade. So it's selling a little bit above average. But if they can get their operating cash flow margin back, and that would boost cash flows quite significantly, which would be a great thing and compress that ratio. So yeah, again, I would just figure out, why is this margin going down? Like, what's going on here with the business? So yeah, that was SNA, not Snap.
Not Snap.
Not Snap.
No one wanted to own Snap this week. Let's be real about that. We got
Yeah.
you got a few ones in here. Have we taken a look at SPG yet? That seems like a new one from Fahad.
SPG. I have not. SPG. I'm in Property Group. Sounds like a real estate company. Whoa. Okay, well, there's a lot of insider buying going on. A lot of insider buying. So
Interesting way to start the analysis here. We can say that the people who work there love this stock.
Yeah, I mean, I just searched the stock and I was on the insider tab and that immediately popped up. So yeah, lots of insiders buying shares, it looks like. Like, let me zoom out a little bit. Yeah.
Very
it rain,
different
make it
than
rain.
SNA.
They seem a little bit bullish. Okay, this is a real estate company. All right. $32 billion market cap, huge company. They pay a 7% dividend right now on the shares. Not bad at all. FFO yield 11%. So real estate over the past like year, this isn't just SPG specific. This is like the entire real estate market is down a lot this year because interest rates are rising. And when interest rates rise, property values typically, well, yeah, they typically go down. So that would mean that these companies are probably going to start reporting losses soon if their property values go down. But those will not be cash flow losses. It will just be asset values declining. So I think that's why everyone is selling off real estate right now. It's just because, interest rates are rising. And typically that's not a great thing for real estate companies and real estate values.
That's probably why there's so many insiders buying right now, knowing that now's a good time to get in, assuming that interest rates are going to decrease at some point in the future, and they're hopefully diamond handing their assets that just decreased in paper value for a little bit of time, and now can cash out those early buys.
Yeah.
One interesting thing I'm seeing here actually on the dividends tab in their TTM dividends over time. It seems whoever's in charge of that is very methodically lowering it whenever the business goes bad. So I am not fully confident that this dividend is going to remain this high if this company goes into times of turmoil, which is honestly debatably a good thing, right? You don't want the company to continue to pay out dividends when they should be reserving that money to not go under or make the business run. So different people may interpret that differently, but that was interesting to me because I tried to coincide those dips right there with whether that was their net income or like revenue or asset value, and nothing immediately jumped out to me, but it's still not as high as it was before COVID hit.
Well, if they're reducing their dividends like in times when their values are going down, that could just be to keep more cash for themselves, to keep the business, past these turmoil points. I agree, like it hasn't gone back to where they were before, in either of the times we're looking at it here, but it's come back pretty close and relatively fast, honestly. It wasn't that big of a period of a dip. I'd rather, a company that I own reduce their dividends and stay in business than keep paying and growing a dividend and, risk that. So I think, that makes sense. And they've, historically grown it very consistently when they're able to for large periods of time, from 2010 to, 2020, they grew super consistently.
Yep. Yeah, I would agree with that, honestly. I mean, I've read stories. I don't know a company off the top of my head, but I've read stories where companies will keep their dividend intact even though the business is going through a period of turmoil, like in 2008, because they believe that keeping the dividend intact will also keep their stock price intact and like give the illusion that everything is okay to people who like don't want to dig in deeper into the business, right? And what they'll do is they'll like dilute to pay the dividend, or they'll take on massive amounts of debt to continue paying their dividend. And then you got to think, like, as a business owner, is that something you want? Like, do you want the balance sheet to be leveraged up, or would you rather just, cut out the dividend for a year or two and make sure the business can survive, as you said, Nick, to continue growing it over the long term? So yeah, I don't know. Like, maybe this was honestly the best move. Who knows? It's a very big dividend paying company, though. Like the total returns on this since 2001, if you take a look at the stock price returns, it's about 350%, but the total returns, including the dividends, is more than double that. at 762%. So yeah, this is like a massive dividend paying company. It also looks like their cash flow isn't quite back to where it was in 2019, but you can see that the cash flows are remaining stable so far.
I
They're
wonder
not
if
dropping more, at least.
I wonder if this company, we'd have to see what the executives are saying in their earnings releases. But are they trying to grow, or are they trying to be a dividend cranking machine? But both could be good. But that's like something a mindset I want to get down. Like, am I buying this as a growth company, or am I buying this as like a safe dividend investment where, like I want it to pay for my gas, or at least for the level we invest at, pay for my gas every month.
Yeah, I mean, based on their operating cash flow growing like this, I would say they're probably more focused on growth. But what is interesting here is take a look at 2007 to 2008. Like this period right here, their operating cash flow from the end of 2007 to the beginning of 2009 actually grew. Yet again, remember, during this time, they lowered their dividend massively. So yeah, they probably just wanted to protect the business and make sure that they could survive. But they grew through 2008, which is pretty impressive for a real estate company.
Don't want to forget that insider buying too. That was a great way to start off. Yeah, definitely an interesting stock.
Yeah, definitely interesting.
No huge red flags yet. Not investment advice, of course.
What do they do? Yeah, interesting. Definitely interesting. Like, I don't see any really huge red flags right off the bat, at least.
If anything, if you wanted to have a long term, let's say if you believed in this company long term, the stock price has been coming down. So, that's when we always like to say when the stock price is coming down, you ask yourself if this is a good time to buy. Maybe.
Yeah, one thing I like to say is if the stock price is going down but fundamentals are going up, then like it's probably interesting. That's usually when I get interested.
Yeah. All right. I'm going to mispronounce this name. Ikeme Talef says, "Hi guys, thanks for the great work." You're welcome. Thanks for being here. Thoughts on PKI, Parkland Corp?
I think that's another REIT.
Lots of REITs today. Maybe people are getting hungry for those dividends, want to get that cash flow coming in as the stock market is whining and complaining for the most part.
Well, if now's a good time to get into REITs because they're down on their highs from a few years ago, why not look at them, right? And they're still paying dividends too. Heck yeah.
Yeah. Not financial advice as always, but I've definitely been buying REITs.
Yeah.
Like, yeah, REITs as a whole, I should share my screen. REITs as a whole, as I said, are like down so much this year. Like banks, I've also been buying banks is because, as I said, fundamentals are going up. With REITs, fundamentals are also going up or remaining intact. And like what I've been noticing recently is when the market and the consensus is not optimistic on one industry, it seems like hedge funds in the market or whatever just sells off the entire industry, all of it. The good companies, the bad companies, the average companies, they all get sold off. So if you can do like strong fundamental analysis and find the best companies in those industries that are fine, but they're just being sold off with the entire industry, then like personally, I think you can find some really valuable stocks and some like really good investments long term.
That just reminds me of the start of the pandemic when this is actually my favorite investment that I've made for myself. At the start of the pandemic, a lot of cruise lines stocks just tanked. People thought that they were going to go bankrupt. No one was going to want to be on a cruise line during a global pandemic. They have, things that are just parked that cost a lot and aren't getting any value. And was able to dig into a few cruise lines, find some that had gone down like 80-90%, but still had enough cash to survive if they were smart and made some good investments there. But the whole industry was just dumped in like 2 or 3 days, basically, just based on a few people speculating that there was no way that these companies could survive, and everyone piling onto that.
Yep. Airlines too. I did like and I don't trade like this ever. I got a little lucky, but it ended up being a swing trade on the ETF jets. For like a 30% gain in like a few months. So that was cool, but kind of risky stuff. Honestly, prefer holding long. But
yeah,
Nick, shout out you, man. That's an epic move right there. When everyone's running away scared, you're taking out the magnifying glass, which is true investor behavior, obviously. So you are a role model for us all.
I wish I was consistently doing that, but
Yeah.
Yeah, I bought Air Canada. I remember when airlines were all tanking, I was like, I just want the airline company with the best balance sheet. Like, I just want the one that's gonna for sure survive this time. And I got Air Canada for like $8 or something ridiculous. And I
that's
also
exactly
flipped
what I
that.
did. I got, I think, Norwegian at like 6 or 7. Did well on that too.
Yeah, I did not hold Air Canada long though. I saw them starting to take on a lot of debt, and I was like, yeah, I don't know. So I
Anyways,
sold it.
steering us back here
Yeah.
to PKI. Daniel, just a couple small things because I always like checking it out on a tab and then pass off to you. This company has been public for longer than a lot of us here have been alive, which is interesting. Pretty good cash flow has been coming down recently, and the dividend payment is confusing to me because it's very minusculely small, but they have one. I just rarely see companies so consistently maintain like an under 1% dividend. Just was something peculiar, but anyways, curious what you think.
Well, right away, I can see that this company is located in Calgary, which is my city.
Close
So,
to home.
Love that. It is a petroleum company, so oil and gas industry. So I imagine this company has been seeing strong growth over the past few years. Jake, did you say that this company was paying a small dividend?
Am I looking at a different stock? Let me check.
You might be, because this company pays a 9% dividend right now. It's PKI.to, by the way.
Okay. I am looking at PKI. Let's say on PKI.to because I think that might be an ADR and then the dividends are. So yeah, scratch that. Great dividend payment, but yes, I was looking at a different ticker, Classic.
Certified Jake moment.
Yep, and this is how you make fun of yourself in the live stream, I guess.
That's okay. Profitability is 2.6, gross margin, operating margin, net margin low, free cash flow margin also low. Free cash flow margin is less than 1% right now. So I would definitely note that. Take a look at that. Revenue is growing at 82% though. Gross profit growing, operating income, net income. Cash flows are declining though. So net income growing 170%, but cash flows are going down. So another one like this. What are the operating cash flows doing? Okay, so operating cash flows are actually going down quite a bit too. They're down like 50% from the highs in 2020, which is interesting for an oil company when oil prices have gone up so much. Yeah, so I would definitely take a look at that. I don't love to see that at all. Revenue. This thing generates a lot of revenue though. Holy smokes. Almost 30 billion in revenue in the trailing 12 months. Yeah, so if they're generating $30 billion in revenue, why are they only generating $600 million of operating cash flow? And why is it going down when oil prices are going up? So yeah, I would definitely try to figure that out.
Yeah, one stat I did actually like, even though it's on a very long time span, in our dividend tab, we show the dividend yield on cost over time. So, this is a big if, but if you are Diamond Hands and you bought this back in the early 2000s, your dividend yield on cost is around like 30%, which is pretty nice. All that really means is, the company's paid a dividend and the stock prices went up. But yeah, those are pretty concerning what you said, Daniel. Like, why aren't they benefiting like all the other companies here? And if it's good times now, what's going to happen if it's bad times in the future?
Yeah. It looks like this company has always had a low operating cash flow margin. Like the most it gets to is about 7 to 8%.
Yeah,
and then it falls down to 2%. It goes negative. It goes close to negative or just 0% quite often. So I would also note that. But yeah, take a look at this revenue versus operating.
And just to quote some comments we're actually getting in to contribute to this conversation, Daniel. Ralph Colbank, how's it going? I say one of the number one Stock and Lock fans, by the way, so thank you so much for joining us. He said, I think they own Fast Gas, which are gas stations, and he said because they are retail gas stations. So that's an interesting thing here. Who are their customers? Is this more B2C gas or B2B gas? Business to consumer, business to business.
Interesting. Okay. Yeah. I mean, I don't know. I honestly don't know. I think I like to see the revenue growing. I don't love to see the operating cash flow low. I don't like that operating cash flow margin. I would dig into that more. And yeah, I would really just try to figure out like why is this company not generating as much cash flow as other oil and gas companies? Like Occidental right now, the company that Warren Buffett is buying hand over fist. You can see that their operating cash flow is growing with the revenue, and their operating cash flow margin is 44% if you want to round up. That is a massive difference.
Make it rain.
Yeah. I mean, so I definitely have some questions about this one for sure.
We have an interesting question here from another friend I'm recognizing. GS Strategies, great to see you. A question for you, Daniel, and maybe this is a little bit too specific, but what bank is the best value right now? If you just had to pick one, your favorite bank stock right now.
Not financial advice.
Not financial advice.
Thank you, Nick. My favorite is, oh man, if we're talking about value, I would say Equitable Bank up here in Canada. If we're talking about which bank do I think is a great growth company that I just hold and I don't ever have to worry about or think about, it
Can
would
I
be
take a guess?
Yeah.
Is it HDB?
Yeah.
Bing, 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 bing. Wow.
India's largest private sector bank. India is just growing so stupid quick. Like, yeah, it's the JP Morgan of India. And I mean, when I think 30 years out, I'm like, I don't think I'm going to lose money on that stock. Not financial advice, of course. That's just my opinion. But
yeah, we hate to really drill this in, but if anyone's watching, please do not be the person that buys a stock because we're talking about it. That is incredibly stupid, and you should always do your own research.
Yeah, I could be wrong, straight up. I could be flat out wrong and lose a ton of money, and so that's just my opinion. But you don't buy stocks based on that.
You can use Stock Unlock though to analyze these companies on your own. Of course, that is what we use. It's why we're building it. And we believe it's the best website out there to really help you make more rational decisions while you're investing. So that is your best tool in addition to just getting ideas from us from this live stream. Don't get it twisted, guys. Thank you. Thank you, Reagan. We appreciate the echo there. And thank you for that question, GS Strategies. Putting us on our toes here in legal boundaries, but we appreciate it.
I'll just show everyone why really quick. So if we go to, well, actually, we're not going to go to the price first. What we're going to do is go to the revenue that these companies generate. So right now we're taking a look at Equitable Bank, which is the stock I'm talking about, JP Morgan, the largest bank in America, and then Royal Bank, which is the largest bank in Canada. And you can see that over the past decade, Equitable Bank has grown its revenue here at 17% compounded annually. JP Morgan's 2%, Royal Bank is 6%. So growing much more rapidly. You take a look at net income as well.
Daniel, I do have one just a minor rebuttal on that. They are growing more rapidly, but it is easier to have higher growth percentages when you're growing on top of a smaller number base. So going from 5 to 10, 50%, 10 to 15 less. So I saw their numbers basically on the floor, right?
I mean, when you compare the stock to the major banks, yeah, their revenue's on the floor, but they're still... this is net income now, but they're still generating 300 million in net income, which is like not insignificant.
This is also like a 9 or 10 year CAGR at this point. Like this isn't just like a 16% over the past year or something. This is consistently being high.
Yeah, what I like to do is also take a look at the 10-year, 5-year, and then like 2-year, whatever. So if you take a look at 5-year, also 14%. If you take a look at 2-year, 21%. And also, this company is projecting net income to grow by 10 to 15% again this year, I believe. And but also, I mean, Jake, you're right. If they're growing from a small base, I mean, if their revenue is $20 million, they could probably grow that a lot easier than a big bank, right? Which is a very fair rebuttal. But when you take a look also at the price to earnings ratio of this business compared to those other banks that are growing much more slowly, this company has a price to earnings right now of 5.3 versus JP Morgan 9 versus Royal Bank 10.
I like that.
Yeah, so it's growing faster. It has a history of growing much more rapidly, and it's also like half the price. And then if you go price to book, it's also selling for a price to book of 0.7. So it's 23% below book value right now. So that's why I think it's value. I also think that it could carry more risk because these major banks are much more diversified. Like they have revenue streams coming in from absolutely everywhere. Equitable Bank doesn't have that yet. Like, for example, they're issuing their first debit card by the end of the year. Like their customers don't even have debit cards yet. So that's like it is a smaller bank. But
Daniel, are you saying you were able to compare those three banks in this one tool together, see all of those metrics over time, and quickly switch between over 60 different metrics?
80.
What a cool and powerful tool I think everyone should be using.
Yeah, you're our new marketer, Nick. We're gonna you just got a new role. In addition to head engineer, you're gonna be chief marketing officer.
Chief Shilling Officer.
I love it. Honestly, true though. So
it is true. I do love stock and log. Like you can do that so quick.
I feel like I picked the last one. One of you guys want to take another comment here? Also, time check, Daniel. I don't know if you're on a timer this week. We also got a comment from the last stream, less girlfriend talk. So I don't know how long we should talk about this.
I'm cutting down the girlfriend talk. Last week was a one-off because we're gonna cut it right there.
Perfect. Let's take a look at UPST. I've seen this come up a couple times in the comments.
UPST, that's Upstart, right?
I believe
we get
so.
this one every week. Yeah.
Have we talked?
We have looked at it a bit, but it kind of washes with the other ones we talk about a lot.
Is
Is
Upstart
that an INMD or B? That one comes up.
well,
a lot.
INMD has the highest insight score on Stock and Lock, basically. For like like it's an insane company.
You'll be able to see that in the screener soon.
You will be able to see that in the screener soon. Is Upstart the company where the guy went on CNBC and was like, I think Upstart is a great buy. And it was like at $400 a share or something. And he was like, I think it's a great buy. And then the CNBC host was like, well, why do you think it's a great buy? Like, what does the business do? And he just like had that blank stare and was like,
well, it's down 95% from when that statement was made. I'm looking at the price chart now.
Yeah, I'll take a look.
If you listen to this, sorry, you said that was the CEO, Daniel?
No, it was like some guy who owned the stock, and someone on CNBC was like, okay, well, why do you think it's a good buy? And then he like said that his mic was cutting out because he didn't actually know what the company did.
Because I own it and I wanted its price to go up.
It was really funny, man. Like after this live stream, you should go and find that video. It was pretty funny.
They IPO'd in 2020, December 16th. Interesting.
Yeah, so let's take a look at their insights. Actually, what does this company do? I always like to figure out like what do they actually do first. Engages in the provision of cloud-based artificial intelligence lending platform. So an cloud-based artificial intelligence lending platform. 1,500 employees. The company's platform aggregates consumer demand for loans and connects it to a network of Upstart AI-enabled bank partners. Interesting. Looks like the revenue's been growing strong. What are the insights? 311 average. Got some very bads here. Got some very goods.
Daniel, I love seeing you start at the insight pie chart at the top because this is something we released like 2 or 3 days ago. And every time you started at the insights page today, you started up there looking at the different ones. I love seeing you use this new feature we just added this week.
Yeah, and a little shout out here. We did say we have 75% of the company here today, 3 out of 4. Joel, who is also working with us, he was actually the person who built this. So Joel, if you're watching, shout out to you, and maybe he'll make it on a stream in the future.
I hope so. We're also going to be adding another feature right here to our insights page. Hopefully soon. I don't know when, but that's why this spot right now is empty. There is a feature coming.
Yeah, I'm trying to get the insight screener in testing, and then I'll get to that hopefully week or 2 kind of timeline.
Sweet. Okay, so this company, gross margin 83%. Okay, so gross margin is like ridiculously high. That is super high. But then none of those gross profits almost make it to operating profits, net income, or free cash flow. So this company right away I can see has very high operating expenses.
Yeah,
Um,
two things I saw when you talked about revenue growth also, Daniel, is TTM, their revenue is up relative to 4 quarters ago, but it looks like they have been downtrending in revenue the last couple of quarters. And I do like checking their selling, general, and administrative expenses. And you usually have to dig into it more than just the surface value number because it could just be general hiring, but that number is going up, up, up. So it seems like this company is spending a lot of money to make this money. And before we finish this, Nick, I know you're, we'll coin you as a technologist here. This is an AI enabled bank. I'd love to get your thoughts on if that's a moat around this company or if this is something people will be able to do more easily in the future when we get there.
Yeah, I'm not sure honestly. I like AI banks. I don't know if you know Betterment. They do a lot of like robo investing. They do a lot of money management, pretty low fees. I use them. I'm a fan of them. I don't know specifically any moats around these products, but there have been a few more that are popping up as AI technology, and obviously Jake, the infrastructure to build on AI technology continues to develop. It's going to be easier to build similar products, but if these are sufficiently developed, there's a good chance that newcomers in the field will have a hard time catching up as much. So hard to say. I think that there's a lot of promise there. Who knows who's going to win at this point, though? But there are some good ideas in the field.
Interesting. They got a lot of cash. The revenue's growing, but so right now, unfortunately, we do not have stock-based compensation on Stock Unlock. We are working and looking into getting that metric because it's very important. But when I see that the selling, general, and administrative expenses are like this high and they're a large portion of the revenue, that most likely means that this is stock-based compensation. So yeah, a lot of stock-based compensation going on, which is dilution to shareholders. So I would definitely take a look at that. Also, the company is losing money in terms of operating cash flow. Oops. So I don't love to see that either. It looks like a strong growth company, though. I mean, if that revenue is growing insanely quick.
Go to the insider tab and look at the insider transaction.
I know. I was waiting for that. For some reason,
Yeah.
okay, for some reason, I noticed that there's a correlation between high selling, general, and administrative expenses, high stock-based compensation, and a lot of insider selling. Like those three things tend to come together a lot. So yeah, we got insider selling, exercising shares, then selling them. Let's just take a look at buys and sells. So the last buy here was the last actual stock buy was in December of 2020. And then let's take a look at the sells.
I just pulled up their 10Q, and their stock-based compensation has just about doubled from 30 million to 55 million in the past year, the 6 months ending this last most recent 10Q.
Yeah, so that's a lot of the revenue. That's like half of revenue, I think.
I see sells from the CEO as well. 2020, 5.2, 2024, 1.
Yeah. Jake, so right here, this is a good example, actually. So right here, we can see this is the CEO, the co-founder. They sold $7 million worth of shares. So earlier on in the stream, there was someone who sold $7 million worth of shares, but it was like 5% of the position.
It's 20%.
Yeah, this guy or this person, I don't know. But they sold, essentially 1/5 of their stock. And then also down here, they also sold 20%. So it looks like they're consistently selling quite a bit of shares. Right here, 31%, $20 million sell. Another $10 million sell, 20%. Another 13 million sell, 20%. $27 million sell. So yeah, a lot of selling. A lot of selling going on.
This is the exact opposite of, I can't remember the REIT that we were looking at, or like maybe SPG or something. It's just all buys. This is all sells.
Yeah. So the revenue for this company is growing really, really, really strong. That's good. Lots of stock-based compensation, though. It's not profitable, and there's a lot of selling going on, even when the stock is down like 90%. So I think based on like a 5-minute analysis, I think there's a lot more red flags than good things about this business, in my opinion. So yeah,
there's a lot of stocks out there to look at, and this is just one. So
yeah.
So I don't know about you guys. I am on a weird schedule because I'm obviously out of my home on the West Coast. I think I got time for one more, but I know there's 3 of us here, so
I'm good too. Do you want to pick the last one, Jake?
Whew, geez, I honestly wish we could do all of them. Like the only thing I don't like about these live streams is it's impossible to get to everyone's comments, and we really do appreciate every single one. So thank you everyone for being here. We did hit a viewer high. I saw it go to 70. So, thank you everyone. Tell your friends. We go live every Saturday. And for our last stock, it's so hard to pick. You know what? I'm gonna go with Shruggin. I think that's a cool name. Could you review apps? APPS. I like picking the tickers I've never really seen before. I think it's always fun to discover new stocks, especially when you're using Stock Unlock.
I see there are a couple of more requests for REITs. I think we'll do some more REITs next week. So come back and we'll definitely get to them. I see BTB and a few others too.
You know what? Maybe this week I could make a video on REITs.
Yeah.
Would that be
We've talked
valuable?
about them a lot. That'd be great.
Yeah. Let us know in the chat. Should we make a video this week on REITs? Because it seems like there's a lot of interest right now with them being down.
It seems like a good time to be buying with how interest rates are going, and we're seeing a lot of insider buying, so that's a good sign too.
Yeah,
Not financial advice.
Okay, this stock is down 84% from its highs. Digital Turbine. What does this company do? Innovation of media and mobile communications, which help deliver end-to-end platform solutions for mobile operators, application developers, device, original equipment manufacturers.
Not turbines.
They don't make turbines. I thought this was going to be like a, renewable company or something for a second there. Okay. Insights. What do we got? Wait, what sector? Technology. Okay. Insights. Lots of average, some very good, not a lot of very bad. Profitability, gross margin average, net margin average, free cash flow margin 16%. So this company is making money. Growing revenue 86%, gross profit 110%. So this looks like a growth company right away. Growth score is very strong. Financial health 2.2 though, lots of intangibles. Shares are growing. Current ratio 1. So it's got a lot of growth. Not the best balance sheet. Looks like it might be growing through acquiring. It's diluting, and it's decently profitable. Okay.
It's got 51 stars on Stock Unlock, so people do kind of know about this. You can see that number next to the little star icon next to the company name of how many other people, or rather how many other watch lists contain this stock.
Okay, so the revenue looks like it's kind of topping out right now, but in the trailing 12 months revenue growth is starting to slow. What about cash flow? Cash flow, what? Wild. Okay. Cash flow, operating cash flow is at 150%, but quarterly it's kind of looking like it's topping out. Free cash flow, same story here. It looks like they run quite efficiently though. Like cash from operations 150 million. Oops. And then the investments, the capex is only 25 million. So a lot of the operating cash flow becomes free cash flow, which is nice. What are insiders doing? It looks like they've been buying.
I think you just filtered it to only show buys or sells there.
Yeah. So
yeah, I saw the last sell looked like it was 2021. Daniel, one thing I'd be curious to get your thoughts on here. A lot of times when I look at businesses, look at the trading ratios because you can kind of see, is this a growth stock? Are they priced at like a 40 PE because people think it's going to keep growing? I'm not really seeing those multiples on this business, but they are also plateauing, which just makes it kind of interesting for me. They have a pretty good free cash flow yield on their relative to their market cap too.
Yeah, I'm going to go take a look at the price to free cash flow now. Okay, so their price to free cash flow got insane up here in 2021. Now the stock is down like 80 something percent as we saw. Now the price to free cash flow is at 11, which is not bad at all for a company that's growing quick. It means that the free cash flow yield is probably around 9%, 9 to 10%. Yeah, 9%. So, I mean, those ratios don't look bad, as you said, Jake.
This one's interesting for sure. I mean, just in terms of financials, which is not enough to make an investment, there are a lot of attractive things we're seeing here. I'd love to learn more, and I'm repetitive about this, but their competitors who's actually working at this company, right? Like I would want to have because we buy stocks generally hold for long term, like be very confident of, will this company be able to continue to grow? in their industry, you know, XYZ. So
I would
be the
also
next
try to
step.
figure out why is revenue topping, like right here on the quarterly. You can see that revenue is seeing some topping action. So I'd want to understand why that is. In terms of free cash flow, same exact story. I would want to know if this is going to stay like this or if this is going to come down. Because yeah, the price to free cash flow right now is 11, but if their free cash flow is going to drop, then you know, price to free cash flow will go up, which will make the stock more expensive. But initially, I'm not seeing a lot of red flags. You know, like this company is growing. It doesn't look expensive at face value, but there are some questions that I would try to answer. I also don't really understand what they do, to be honest. So I would want to know that too.
I see there are a couple of comments asking about if we're adding a screener soon. Yes, there's one coming. Yes, soon, based around our insights, which will be, you know, a really cool feature to get out. If you're not in our beta testing crew, reach out to support@stockunlock.com. We'd love to add you. We'll start beta testing in the next week or two with the Insight Screener, and hopefully, you know, releasing it. Don't want to give a date yet, but soon, hopefully.
You guys can probably tell that engineers are much more hesitant to give dates than I am.
I have to do it. So
when you guys aren't here, I'm like, oh yeah, you know, probably 2 weeks. I'm not even the one coding it.
I'm glad I'm here to defend myself.
Hey. Well, thank you everyone for being here. We go live every Saturday, 11:30 EST. Nick, this was your first time, definitely not the last you are joining us. We're going to rope you in here as much as we can. Yep. I did see someone like make an introvert comment. I don't know if that's true or not, but you know, we really appreciate you coming out. And I'm not sure if anyone else has closing words here, but love all the comments and thank you so much for being here.
Thanks for having me, guys. I'm excited to come back. Hopefully, you know, every week. This was a blast, actually. So glad to interact with our users too. It's awesome. Glad to see what people are interested in. Didn't have this much perspective, and like bringing it back to, you know, engineering stuff. This time will definitely impact what we're going to be building, our prioritization, our focus. A lot of people are asking about REITs. Maybe we'll dig into adding more REIT insights in the future, things like that. So like this is really insightful for us and what our audience wants. Huge amount of value to be here, you know, for us.
Yeah, like maybe next week we could like just ask the audience, what do you guys want in the platform, you know? And then really dive into that and just like answer questions like that. We're kind of at time right now, so maybe that's not a good idea now, but yeah, that'd be great. One last comment here is just from SM Finance. It says, thank you guys for everything you do. Just want to say thanks. You guys are very inspiring. You know what, SM Finance, you're inspiring. This guy is in our Discord. I'm assuming you're a guy. I'm sorry. I'm making assumptions right now, but you're in our Discord. This person, I believe, is a teenager, they said yesterday, and they are investing, I think they said like a couple $100 every single week. And for a teenager, like incredible, right?
Not worthy.
every time I think about my own investing, I'm always just like, I wish I started sooner and like invested when I was a teenager. So like SM Finance, you're killing it. Absolutely killing it. Yeah. All right, so that's going to wrap up the live stream, though. Like, thank you, everyone, so much for coming. As Jake said, we really appreciate it. We do this every Saturday. And, yeah, just hope you guys enjoyed, and we will see you all next week.
See you soon.
Peace. I'll hit the end button.
Okay.